Hello everyone and welcome to this week's episode of the Investors Corner. In this week's episode, I've got Matt Ovie and Matthew Mullane, two estate agents that have been in the industry for over a decade each, and we're going to be talking about where they would spend £100,000 if I pushed it across the table and gave it to them on property investments. We're going to talk to Matt Ovie a little bit around what happens in the Texas market and the Canadian market, because that's where his background's from originally. And I'm going to quiz Matthew Mullane on the type of things that maybe landlords should be doing to help themselves when they're looking for property investments as well. And of course, because it's all things investing, I'm going to ask them about their other investments alongside property. Enjoy the episode. This is going to be a great listen. See you soon. Hi everyone and welcome to the Investors Corner podcast. This week I am joined by two Matts, one that goes by the name of Ovie, one that goes by the name of Matt.
Hello.
How are we, gents?
Very good, yeah.
Yeah, really well, thank you. Glad to be here.
Good. So you guys are seasoned pros in the property game, many years working in specific marketplaces, but very much kind of overall seeing mortgages, seeing landlords, seeing sellers go through, chain building, everything in between. So the questions that we're going to cover today, I really want to kind of put you a little bit on the spot with some of the investing stuff. Now off camera, just so you know, I told these guys it's going to be straightforward and simple, but I got a few little mic drop moments. No, I would like to ask you first of all, because this is an investing podcast.
Yeah.
With careers that have been in property, have you ever invested in anything that's not property? Starting with you, Matt.
Yeah, I've invested in shares through Hargreaves Lansdowne.
I've got a Hargreaves Lansdowne.
Yeah, just through the account. I've done some trusts. So I've done the Scottish Mortgage Investment Trust is like my go-to when you just want solid. It did really well over COVID, and then less so. It piggybacked a little bit off having shares in Tesla, and then did a few individuals that didn't exactly go as well, which is why I always go back to SMT for
that served you well, was it?
Yeah. I mean, to be fair, I did cash out a few years ago just before I moved, and thank God that I did cash out at that time because it halved in the share price sort of between then and now. But it is slow, steady, long-term investing, which is the key to most investments, really.
Yeah. Anything else outside of stocks and shares?
I think I've got £10 in Bitcoin, which is now £20.
Yeah, I know, yeah.
I thought if at least you got something. If it does end up becoming £2 million a Bitcoin, at least I've got some.
Got something, 10 to 20, doubled his money. What about you?
I've dabbled a bit in crypto, like Matt with his Bitcoin, and I've done some Bitcoins too, especially after lockdown, just some stocks and stuff like that. So nothing too serious, but just dabble a little bit into the stock trade.
Nice, good. Well, there we go. I mean, property being the number one thing that you guys feel confident in, I would have thought. So through the eyes of a landlord, you mentioned lockdown there, we're 2024. How do you think the market's evolved over the last kind of 3 years through the eyes of a landlord? Because we've seen the market change drastically in the last 36 months. So, Matt, you've been heavily in Binfield Village, which is a core kind of village location for families, but also people that are very wealthy. So I'd imagine there's a lot of people in the village that have got 1, 2, maybe even 3 buy-to-lets as a kind of long-term asset as well. But through the eyes of a landlord, how do you think the market's evolved in the last 36 months? Lockdown happened. It went bonkers. So we saw 18 months with stamp duty in there as obviously a big trigger. And then interest rates spiked as well. Did you actually register and work with a lot of landlords or property investors over the last 3 years in a village location?
In a village location, not a tremendous amount, although there are a lot of landlords that live in Binfield. In terms of the buying of these properties, they not as many in Binfield, but Binfield's always a stock issue. It's the same with the sales market as well as the rental, is there isn't enough supply to meet the demand. So not a tremendous amount, but I'm sure if I was in some of the big town centre offices, that might have been slightly different.
Oh, you've worked both, Matt. Why do you think that a lot of investors look at property in the bigger towns rather than the smaller villages?
I would say, I worked in the ready market, which majority of our stock that we were selling was either landlords selling because also they're selling off some of their portfolio, or also investors looking to buy. I mean, a lot of the investors I was dealing with when I was working in Reading, they were looking for, they got like lots of properties in London, and they wanted to sort of buy some property over in the Reading area, which they were looking at buying like 12 to 20 properties at one time to build their portfolio. But reason why they buy there is obviously they can get properties fairly cheap. And they can get, obviously they're close by to also the main railway station there. You've got a lot going over there, of course, to like, you got the hospital there, you got the college there as well. So those are a lot of factors where obviously landlords looking, obviously easy to rent out and sort of get the best value out of it as well.
Yeah, no, it's a fair point. I think sometimes investors buy through the eyes of not necessarily the market, but what features are in and around to make sure that they can get maximum rent, and obviously void periods down to a bare minimum as well.
Yeah.
In terms of not necessarily just landlords, but what would be the number one thing, generally speaking, in the home counties that you think is the biggest challenge for people looking to buy property at the moment? Whether you're a first-time buyer, upsizer, landlord, what's the biggest challenge that you think buyers face with estate agents, portals, market, everything at the moment going on, Matt?
Yeah, so I think, I mean, from a first-time buyer point of view, I think it would be deposit levels and available stock. From a landlord's perspective, I'd say it's the stamp duty surcharge. I think that there was quite a big change when that happened. We've seen how many landlords we were dealing with day to day, actively buying. But mainly, stock. If the right property comes up, people will buy it. If the figures stack up, whether or not that's a homeowner or a landlord, if it works, it works, and they'll go for it.
Yeah, I think it's a mix of things where you got, also the rental market is very high at the moment. So obviously you've got like the likes of the first time buyers paying high rent right now, and obviously while they're renting, they're trying to save money for deposits. So obviously their deposit level, like you mentioned, is maybe less than what they would have had before. And then on top of that, you can also see interest rates that risen over. So it's kind of moved the goalpost a bit, and they're just also struggling a little bit to also financially secure a property, right? So
that's the cycle, isn't it, that people are caught in at the moment? Is, I think the government have tried to help first time buyers, but as a result, they've made it harder for landlords to buy property, which has then resulted in rent soaring, which means the first-time buyers that are tenants are having to save less money to afford the rental, and the cycle continues. So actually, they just probably made it a little bit more difficult for everyone else, and there's an extra stamp duty surcharge, as you mentioned there as well. So they've got more tax and less action.
Yeah.
Frustrating. Yeah. If you were to buy the perfect buy-to-let, Matt, you've been a specialist in Binfield Village, but you've worked other marketplaces. You've worked Camberley, which is, a big town and things like that as well. And obviously you live just outside too. So if you were to buy the perfect investment, if I gave you 150 grand across this table and said, right, you've been in property for over a decade, go get me the perfect buy-to-let and we'll split the profits, what would you do with it? What would that look like?
I think my perfect buy-to-let, which might be slightly different to what some of the content comes up on Google if you was to search for it, is I would go for a similar area to what I'm in now, family area, nice area, good schools. I'm not that worried if it's close to a train station or not. If there is a train station nearby, great, but that's not going to be my sole focus. My focus is going to be nice area. I want the tenant to be, firstly, long term, and secondly, have similar values to me. And if they're living reasonably close to me in a similar area to me, they're going to value good schools, nice area. Therefore, they're probably going to look after my property better, which means in 10, 15, 20, 25 years, when you want to cash out, you should have less void times, less months where rent hasn't been paid. The property's less likely to be, go through needing a refurb. And that would be my perfect investment. I'm sure there's other people around here that may say otherwise, that might respond with a better cash flow short term. But I think long term, the cash flow will sort itself out. The yield will improve, assuming property prices and rents continue to increase as time goes on. Although today we might only get a 5% yield, in 20 years' time, that 5% yield based on today's purchase price might become a 10% yield. And that would be why that's what I would do ultimately, buy a 2-bed in a very, very well-desired area.
Yeah.
What about you, Matt? Anything different to that? You going HMOs? You going to Airbnbs? Holiday lets?
Yeah, Airbnbs are very popular nowadays, aren't they? So I would say, especially in Warfield. I mean, Warfield's always been that kind of, I guess, that premium sort of area compared to like the likes of like Bracknell, for example. So, also you got a really good school there. You got White Girl schools. So a lot of people that are renting or tend to rent sometimes to get their kids into that catchment area for the schools. So they may have been out of area, or they may have been Bracknell, but they couldn't get to the catchment area. So they might move for that reason there. So I would say also you got like a 2 to 3 bed or even like a 4 bed type house in Warfield would be a good sort of investment. And if also do it up a bit, also it looks like really nice and professional, you're going to attract professional type tenants, which are going to be tend to also look after you probably a bit more, I would say. So,
I mean, some of the rental prices that Andy's getting on those Berkeley properties in Woodhurst Park.
Yeah.
You know, for anyone that doesn't know the area, Berkeley development, you know, beautiful inside. Typically, we're talking townhouses, you know, terraces, end terraces, semi-detached, few detached. But some of the rental prices that we're getting on those for people that are desperately looking for that, and proper, really lovely tenants, you know, highly qualified people, big earners that are looking for long term, moving for schools, moving for the community. But the rental prices, the yield of thinking, right, I'm going to get a stronger yield in a busy town compared to some of the villages, it's not the same as what it used to be anymore. You can get those yields in the villages. If anything, sometimes they're improving because there's so little properties to rent that's a family home like you talk about. You mentioned 2, but even a 4 bed detached in Binfield. You know, when was the last time one of those went up for rent?
Yeah. And it would have been, I mean, it'd have come, if it came up, they'd have had a queue of people for a 4 bed school catchment, all the rest in the village.
And you may find out, because obviously the interest rates risen, that some buyers can't get on the property ladder, so they go down the route of, we'll rent for a bit until we can also save enough money to get a deposit together and buy a house that we want in the right area that we want.
And I think that at that end of the market, this is the big thing that I guess people looking to invest need to be aware of, or for the market to be aware of really, is if you're buying a 4 bed detached with a view of renting it out, A, it has to be long term, but B, when you do that, you're putting yourself in a really niche market. And if you're in a niche market, you can get the demand and the premium for that demand, which is great. But you also find you're in a position where you can be a little bit more choosy around your tenant. And because at the moment, the way a lot of people are going into business ownership, a lot of these business owners, with the way they kind of mitigate tax and things like that, are not necessarily able to buy a property with a big loan because they're trying to make their profit sheet look lower from a business point of view, but they've got high turnover. So from a referencing point of view, it's no problem to rent at $4,500 a month, but try and get a $4,500 a month finance on a mortgage, and the figures don't stack up. So actually there's a real niche market there for people to go and almost have a rental that's £500 a month more than it probably should be, but because there's a demand. And I think that's the future as well. I think that's not going to change. It's not going to be less business owners going back into employed. And I think that's another thing that lockdown has brought to the economy, is more people have decided they're going to run their own company, work remotely, have a little bit more control of their freedom, and we're seeing more business owners, you know, in the UK. And I think that's something to bear in mind with those types of properties.
I've definitely seen an increase of sellers as well that are considered going to rent it to break the chain, make also the sales process a lot easier as well. And also it's good, they're like in like sort of Bracknell, some are looking to move out of area now because it's getting sort of, they've been in Bracknell for, I don't know, like 20 odd years, and they're just looking for that next sort of forever sort of move, really. So they're looking outside the area and may go in to rent it, check out the area until it gives them a bit more time to find the house that they really want. So
I've seen quite a few tenants as well that are homeowners. They might own in a different area, but they've got a job here or a contract here for 2, 3, 4 years, and they're renting their current home out, moving their family here while they see out that contract, and then go back. I've seen that, you know, more often than I did perhaps 5 years ago, say.
Well, the first 4 properties out of, I think, 10 that Andy listed in January to rent, those 4 people were all going to Dubai. So they were all letting out their family homes and moving to Dubai.
Wow.
Which was
That's a big percentage.
Big trend, I guess, because they're thinking, right, we've got our self-assessments, we've got our financial year about to come up. So they've all decided, actually, from a business point of view, we're better off running our company out of Dubai. So 40% of the January rental properties that we listed were families moving to Dubai. You know, which, much like you're talking about there, a let to buy or a let to let, effectively, you know, where you're in the Midlands and you think, I'm going to keep hold of the family home. Don't want to buy down south because maybe I'm not planning to be there longer than 3 years on this contract. So you keep your family home up there, you know, put a tenant in there, rent down here, maybe you get a little bit of reimbursement from the company on the contract or whatever it may be. And then you go back to family home location afterwards, basically. So, what do you think the market is likely to do in general? You know, in the home counties, Matt, what do you think we're going to see over the next 6-8 months for the property market?
I think there will be a bit of a push now because there always is. You get spring out of the way, the weather's slightly better. You know, it will naturally be some good months. I think as we approach the election, especially in perhaps somewhere like Binfield and Warfield, that, you know, these people have got their finger on the pulse. They're going to be looking at what's going on. I think as we approach there, as perhaps the autumn budget comes in and there's people, you know, we might see some, what's the word I'm looking for? Some desperation tactics come in to try and win votes. That might influence a few people. Then, you know, the tactics that come in might be really beneficial to people. That might help us. Some of it might be a bit scaremongery, and that may make a few people nervous. But I think, you know, it will be, you know, we'll see some solid performance between now and then. And I think after the election, I think it will kick off royally once people have got some certainty.
Certainly, yeah.
I mean, Vez and Tom from Mortgage Tribe have been keeping us up to date with the rate changes, and it marginal. But the last 3 or 4 weeks, we've seen a little bit of reduction in average rates. We've seen, obviously, inflation come down, which is nice. You know, that doesn't get banded around in the media as much as when the rates are creeping up, or when inflation's up at, you know, 10.6% or whatever it was. But that's happening. We've got the 99% mortgage products out there now and in action, you know, which is crazy. And we've got buy-to-let rates that start with a 3, which you don't have residential rates that start with a 3. So
I heard that, was it Santander that bringing down tracker rates?
Yeah, which is interesting in itself. You know, they're almost preempting a potential Bank of England rate drop. You know, which I think we will see some significant Bank of England rate changes, you know, happen easily within the next 3 to 6 months. I think it'll be fairly significant. It wouldn't surprise me if you go into next year with that as a 4%. I mean, quote me on it if you want. I can't guarantee it, but that's what I would expect. We go into 2025 with a 4 something rather than a 5 something. So these are all positives for the market, really. And the thing for investing is, if you are trying to buy when the curve is increasing, it's very difficult to make the big profit margins. You talk about crypto there and you said, right, I've got a tenner in there just in case something crazy happens with it. It's actually really hard to make good profit out of a climbing market. But if you can get it just where it's bottomed out, or in and around that, where the curve is just dipping around that bottom bit, which I think we may be now, then that's probably the best time to go and get that investment. So what advice would you give to landlords that are sat on the fence at the moment? They've got the cash in their bank, but they're kind of waiting to see what the market does. What advice would you give them out there?
I mean, it's all good news, of course, to the mortgage world right now, with regards to the emails that updates we've been getting. So I would say probably look to, in the next sort of couple months, look to obviously invest in property. Obviously see what the rates come down to, but especially if the base rate of England comes down, then definitely look to invest on that. So I would definitely say invest into property, because it looks like it's going that way, where also you can capitalize on your profits. So,
and if people are listening, they probably worked out that you've got an accent.
Oh yeah.
Do you keep tabs on at home what the market's doing there?
Not so much really. Not in Canada. I do speak to my sister, also in America. She lives in Texas, so I do. She does keep me up to date with what's going on with their sort of industry, and because obviously everything works around obviously the housing market there, their jobs and everything. So,
what is the market doing in Texas?
Well, last time I was there, the market was absolutely kind of booming there. But yeah, it's up and down. It goes up and down quicker than over here. But last
because
time
inflation in the US is still horrible at the moment.
Yeah, it's so horrible. Yeah. So my dad just bought a house recently on that one, but I think he struggled a little bit to sell his house.
Is this in Texas as well?
Was, yeah. That was the most recent conversation. But when I was last there, it was absolutely booming there. So every time I speak to him, it's always changed. So. Yeah.
It's crazy, isn't it? That in a country like America, that the market can be so up and down. Yeah. And like we see here, region to region, home counties or Midlands, Wales, Scotland, etc., up north, it's all very different. Yeah. Is it the same state to state? Very different?
Yeah, I mean, each state is like a whole different country in a way. I mean, you just go in there as a tourist, you feel like you're in a different country. If you went to New York, to Texas, you're completely different climate and everything. So yeah, it is very much different each where you go to, because each got different governments. So,
and the prices in Canada typically on average higher than the US or lower?
I would say don't know really. I mean, I would say that depending on where you're at, really.
Again, it's location to location.
Yeah.
Same anywhere in the country, really, isn't it?
Compare Newcastle to London, Newcastle will be cheaper than some areas. London will be a lot more.
They all got different, they get taxed differently and everything. So, yeah.
What are you thinking for your clients, Matt, that you're looking to be, working with in Warfield, Binfield, hyperlocal? What are you looking forward for them, for the market? What's your hope that the government maybe do bring in? Is there any... Would you like them to just leave it as it is and let it play out because it's okay at the moment? Would you like any particular features to come in, any incentives, or are you quite comfortable with how it is at the moment?
I'm probably a little bit on the fence on here. If they leave it as it is, I think that's fine, but truly leave it as it is. No niggling, this might happen in the autumn statement, or we might bring in this, because as soon as you add that what if question, it's got the potential to delay things. So if they're going to bring in anything for sort of this market where we're at, it's something to encourage the downsizers, the 60, 70, 80, 90-year-olds in 4 or 5 bedroom detached homes that ultimately need to be encouraged to downsize so that the family can go and buy that next home. That would be the dream scenario, because there's a lot of people in this area that are sat on 4-bed detached and there's only one of them living there, while there's so many families that want to move in and take advantage of the schools, the doctors and everything else. Or just leave it alone and let it pan out. There is enough confidence, I think, if people have got certainty, and I think that's all it ever comes down to, and especially in an area like this where there are growing families and there's real reasons to be here, if they've got certainty, they'll move.
Yeah, you raise a great point, and it's actually not the first time we've discussed that on this podcast about downsizers. And is there some way of incentivizing downsizers to move and free up these big family homes? Because we all know, probably in our family friend circles, retired people, and it's their right to stay in their home, of course, but retired people that ideally would like to move out of a big 4-bed, 5-bed detached and not have to clean. I mean, my mum rattles around in a 5-bed detached house in Warfield, bang slap in the middle, perfect family home, owned it since new. She's 80 this year. She doesn't want to be cleaning 5 bedrooms. There's only her and my stepdad that lives there. He doesn't particularly want to cut the grass back and front. She doesn't want to clean the house. They would like to downsize, but there's not really any benefit to them to do the downsize because of the cost of doing it, the stress. They're pulled around a little bit of where in where in the country they should be. Most of us are down here, but then my sister is up in Sheffield, so they're kind of caught between, do they move somewhere and downsize for the benefit, close to the sea? Do they stay here where the most of the family is, or do they go up to Sheffield, where they could, sort of arguably buy a mansion with the same money?
Yeah.
So they're really caught on the fence. But if they were pushed with a little bit of incentive, I mean, the way my stepdad brain works on deals and trying to save money and be shrewd, that generation does. A little prod where you could say, right, you could save 5 or 6 grand in tax.
Yeah.
That would probably be the trigger to make him do it. But I just don't see how the government can bring that in as much as I'd love them to.
Yeah.
And I think going back to what you said earlier about cycles, they will then go and buy smaller properties that first-time buyers will be buying with huge cash reserves.
Yeah.
So then first-time buyers will lose out again if they were to do something to encourage that.
Yeah.
Your mum would go buy a 2 3-bedroom home, say, first-time buyer can't buy it. And your mum's going to have a lot more equity than a first-time buyer going for it. So
there'd be some massive chains.
Oh, could you imagine? It would just go on forever. It would just go up and down.
Just literally just
down.
like that. Yeah. Oh God. But the idea around it to free up these homes, for families. I was just talking to a mutual client of ours, that did exactly that. It took them about 2 years to find the right property, but that's what they needed to do. And they were getting so frustrated that people were just not moving out of these big houses. But I do think the government can throw some sort of incentive in there.
Absolutely.
And I think we still, as much as for us being agents that sell second-hand homes, I still think there's a place for so many more new builds to be built.
Yeah, definitely.
Just that opportunity of seeing more new build sites pop up. I know people don't like it. I know it adds to traffic, but if for the generations that we sit in and below us, it's important that this housing quota gets built, because it does cause a real false economy on the marketplace.
Yeah.
And that I think would have a big difference if we could get more planning applications approved, get more of these builds going on, especially in the marketplaces that you work. You look at something like a Woodhurst Park, or, you look at New Amen Corner, as I call it.
Mm-hmm.
These are so popular, these estates now as well.
So,
Yeah, and I think, ultimately the decisions on the planning probably do need to come in at a national level, not by the borough, so that it can be decided fairly equally distributed. And they need to be houses.
Yeah.
Someone isn't going to downsize to a converted office block that's 60 apartments.
No.
They're going to downsize to a house that fits their need.
Mm-hmm.
So I think building the right type of homes, not converting an office block into 100 flats and going, oh, well, we're 100 closer to the quota. That's not fitting the bill for what we need.
Yeah. They focus on so much on that sort of first-time buyer sort of market. It's time for them to start focusing on sort of the bigger houses, like you mentioned. So also we've got this whole circle going around, and we can get it all moving again.
Yeah, I mean, even the government could bring some sort of reimbursement quota or whatever it may be. You know how the government kind of say to big developments, X percentage must be housing association.
Yeah.
Well, what about if they did the same thing for bungalows?
Yeah, 100%.
As an example, if they can do it for housing association, why couldn't they say, right, if you're building 100 units, 20 have to be housing association, 10 have to be bungalows. I mean, you can still charge a premium for the bungalows, but that's what the new build development is missing out on, is the retirement home, not just the first time buyer home and the upsize home. And because it doesn't stack up for the developer to build a bungalow, because they get more money for a townhouse on a smaller footprint, maybe there's some sort of incentive for the developer to put a bungalow on there or to put a retirement friendly home on there. You could have some really nice masonettes with gardens. You see the garage masonettes for the first time buyer. Well, what about a ground floor masonette for for a first time? Not first time. I was going to say last time. Then that's savage. Maybe I won't say that to a retiring person rather than a last time buyer. But that would make a huge difference, I think, to people absolutely. As well. Right, going rogue now on the questions. Worst house you've ever been in, describe it to me, but don't give me the address or the location. What's the horror story that you can think of? Ovie, you're smiling, so I'm going with you first. Worst house?
I've been I've quite a few, so obviously worked in Reading, like I mentioned. God, I remember the first house I went to when I think it was you that actually moved me there when I was working in Warfield, and I went to Bracknell. The first house I went to was in.
Don't say the address.
No, not. It was in Great Hollands.
Yeah.
And it was homeowners, and I've never seen a house so messy in my life. So basically, it's a hoarder's house. They had like about 3 months worth of dishes on the kitchen, black mold everywhere. They were sitting in the living room. They had rats as pets in a cage.
Wow.
Upstairs, they had a.
I wonder if they bought the rats or the rats just found their way to the house.
I don't know, but it was pretty scary. It was quite dark room as well, so I was pretty scared because I was coming from Warfield, which are really nice houses, and then went upstairs to do the viewing, and the son was playing on his Xbox, swearing and stuff like that. The bathroom hadn't been cleaned since they've owned it. I was like, wow, this is a huge difference in the houses I was used to. So, but yeah, I would say that's probably the worst experience I've had.
And now you've started a business in Warfield.
Yeah. So, but lucky enough, I don't get to see those anymore. So, yeah.
What about you, Matt?
Yeah, so I worked in Camberley to begin with, and then I moved to Reading to do this job. And I was naive before I went to Reading. I really did not know. And this is Reading, central Reading, you know. But one house in particular sticks in my mind where the landlord wanted me to go value it. And I said, oh, okay, is the tenant going to be there? He said, yeah, I've let the letting agent know that you're going to go round. There's only one tenant that lives there. And I walk in with the keys, and there's bunk beds in the living room. There's bunk beds in the kitchen. There's bunk beds in every room. And there's about 15 people living there that did not want me in that house. I was only 23.
Yeah.
So went in, was in and out in about 45 seconds, ran back to my car, ran back to the office, and then called the landlord and said, I think you got more than one tenant living there. But yeah, I can't remember how that ended now. But that always sticks in my mind as what an experience coming from Camberley to Reading to have to go and assess that house.
I sold a house for a landlord once, actually, and I hadn't realised that the landlord and the tenant had fallen out, and the landlord decided to sell it, but obviously he'd fallen out with the tenant who didn't want to move out but was selling it, so he'd served notice. Had no idea about this. So anyway, the tenants, when I got there, left, did the viewing downstairs, all very normal, took the buyer upstairs into the main bedroom, opened the door to the main bedroom, and the tenant had set up the bedroom effectively like a bondage studio.
Oh no.
There were sex toys on the beds. There was whips and chains hanging up from like some weird chandelier thing. The curtains were shut. There was weird mood lighting going on. And when I got back, I'd kind of went round, locked up, and the tenant actually arrived. Obviously the buyer had left at this point, and they just smiled at me, and I went, bedroom was tidied up really nicely, and they were like, tell the landlord he's an arsehole. I was like, cheers.
Okay.
But the buyer, to be fair, just went straight into the room, and I was like, yeah, I think the tenant and the landlord don't get on, and he just sniggered. He was just like, that's funny as hell. But thank God it wasn't some little old lady that had never seen anything like that in her life. But yeah, that's the great thing about being in property for as long as we've been. You get to see some funny stories, right?
Yeah.
Well, I wish you all the best of luck with your business. Thanks for coming on the podcast.
Yep.
If people want to get in touch, buying, selling, moving, renting properties in Binfield and in Warfield, then speak to Matt and Ovie. These are definitely the guys that for the last 10 years have bought and sold, you know, between the two of you in those villages more than anyone can say they have, for sure. So, you know, thanks for joining the podcast, and thanks for your pearls of wisdom and your knowledge, gents.
Thank you very much. Thank you for having us.